What's up guys? In this video, I'm going to share with you what my overall investment strategy in equities is and how I've actually structured and managed to grow my own $500,000 stock portfolio over a number of years to the value that it actually is today. I love learning and I love researching about companies. I've even built mine of my own, which you can see in some of my other videos. And investing in stocks is as much of a passion of mine as it is a way for me to work towards financial freedom and a self-funded retirement, hopefully an early one. My personal portfolio has actually grown from both a combination of gradually and progressively investing in companies that I find and I like, as well as investing more when there's actually a wider downturn in the market like we had earlier this year in 2020. Now, before I delve into my strategy, a bit of context I think will help. So I'm an Australian, but I've been living in Singapore for the past 10 years. So both of these countries are obviously very close to my heart and I invest in each for very specific reasons. Hence my portfolio is actually made up of both SGX stocks as well as ASX stocks, and of course stocks based in the US because that's where a lot of the exciting stuff is happening. So now each of these countries I invest in are actually driven by different reasons that actually form part of my overall portfolio building strategy. So certain countries have more weight towards dividends and others actually have much more greater weight in terms of prospects for growth. So I'm 38 now and I wish I actually started earlier, but in the scheme of life, I think I actually have still a fairly long runway ahead of me. So growth is still really, really important. So let's start with that. First and foremost, and because I still consider myself to have a long-term investment horizon, I have a very growth-oriented portion of my share portfolio, which currently makes up the majority or about $300,000 of my portfolio. A lot of this value is actually being through compounded capital gains through companies that have just continued to grow and dominate the markets that they operate in over a number of years. And I've just kind of let those positions ride without selling down. And they've actually grown quite a bit from quite modest initial investments. These are mostly based in the US stock exchanges, and these stocks I buy are companies focused on expansion, offering more potential for capital growth as the share price actually follows the earnings and the company's profits higher and higher each year. Now, the US stock exchange has over $25 trillion in terms of market capitalization of listed companies and it's home to some of the world's biggest and fastest growing companies. So there's actually plenty of opportunities there to invest. So these companies that I look for are also inclined to actually reinvest their earnings into either product research or further development of their offerings and actually entering new markets as well, and also acquiring other businesses in order to continue their growth. So some basic screening metrics that I look at while researching growth stocks I've invested in are factors such as an above average growth in earnings per share or profits that the company generates every year, and above average profitability in terms of operating margins and or gross margins, a high historic growth in terms of revenue or sales, a high return on invested capital, which is also a measure of how efficiently a company spends its actual cash. But I think the most important thing that I'll look at is the company needs to actually hold a promising position in an emerging industry that actually features long runways and addressable markets for expansion ahead of them. Some of the key industries that I've personally invested in for my growth investments are in obviously cloud computing, data centers, e-commerce, AI, machine learning, and telehealth. But I'll delve into some of those specific stocks in some of my future videos, so make sure you subscribe to my channel for those. The second strategy of my share portfolio is an income-oriented one. So as growth stocks tend to be a little bit more volatile, dividend stocks tend to operate in more kind of mature industries, which have relatively consistent sources of revenue, but tend to have more moderate or slow growth. So I've actually built up about $200,000 in my share portfolio that is actually income focused to actually build up a passive income stream for me that pays me basically every quarter. A long-term plan is to actually build up this passive income source to over 6 figures, hopefully. So I actually have a long way to go, but I enjoy this process of building this portfolio as every dollar that I add, I see a return on it every few months in the form of dividends that I actually get paid out to me, which I actually use to put back in my portfolio again. So these income-oriented shares are in companies that have long track records of paying steady dividends to their shareholders. So I invest in income stocks through a number of different types. The first being listed investment companies in Australia. A listed investment company is one that actually invests in other companies. And by investing in a LIC, you're actually investing in a team that actually actively manages your money and makes the investment decisions for you rather than yourself having to select individual companies. Generally, the listed investment companies that I hold invest in ASX listed shares like the banks, miners, utilities, and actually they aim to outperform the index with a somewhat active management with a long-term investing focus as well. They also have a long history of paying out very steady and fully franked dividends of about 4 to 6%. So in Australia, companies attach what is known as franking credits to their dividends, which basically reflect the amount of tax already paid by the business. So companies that actually frank their dividends pay the corporate tax rate about 30% on their profit already, and then distribute the remainder to actual shareholders. So for me, living in Singapore, there is no withholding tax, so I get the full dividend paid to me across from Australia into Singapore, as well as Singapore doesn't have tax on dividends either. So essentially, the dividends that I receive from these Australian listed investment companies are totally tax-free. I also focus a lot of my income share portfolio on REITs. A real estate investment trust is actually a company that owns and in most cases operates income producing real estate. I love investing in REITs because they have this underlying real asset in terms of property, and the rental income is actually usually more consistent than relying on company profits for dividend payouts. REITs typically yield a little bit higher, around 4.5% to 7%. So Singapore REITs are an important component of the Singapore stock market and actually make up about 12% of the SGX itself. I know for a fact that a lot of Singaporeans love REITs, and I think it's the whole Asian obsession with property, obviously, and me being Asian, right? But who doesn't want to own like a piece of a shopping mall or a part of an office building? And the reason I've really focused on REITs on the SGX instead of Australia, for example, is that the dividends are fully tax-free. The yields are pretty good, and a lot of time a lot higher than Australia and around the world. And the majority of REITs in Singapore actually own properties outside of Singapore, across Asia Pacific, Europe, US. So you actually get an opportunity to invest in property all over the world just by investing in REITs in Singapore. So there you have it, guys, my overall portfolio strategy and actually how I've actually currently deployed a combination of both growth as well as income investing techniques to enjoy the fruits of both styles of investing while I continue to build this portfolio. So I'm kind of making bets on humanity's drive for constant innovation and growth for a kind of a bigger and brighter future in my growth portfolio, but also betting on kind of the fundamentals of today's companies and real estate to actually generate kind of pocket money for myself at the same time. My midterm goal is to get this portfolio up to $1 million. I'm not sure how long it's going to take me, and hopefully eventually build up enough passive income from these dividends to actually achieve over $100,000 a year. This is a tall task, but I'm going to set the bar high and see where I end up. So I hope you enjoyed this video, and thanks for sticking to the end. I would really appreciate it if you tap that like button and also subscribe to my channel if you would like to follow me on my own personal investment journey, because I will make a lot more videos about my own personal holdings, my specific stocks, my watch lists, as well as sharing future moves that I make to actually continue growing this stock portfolio of mine. So let me know in the comments section below as well if you have any questions or investing advice for me. I'd love to hear from you guys no matter what, and I'd like to sort of get some tips around how I can improve those videos as well. So until next time,